Hello, Theo traders. Gianni DePoce here with you, and today is the 14th of May, 2024. All the rage in markets today is around another meme stock mania, and so I'm starting off sharing a chart of GameStop with you. And simply put, I'm just going to be honest with you. I would avoid names like GameStop and AMC in this type of environment. Now, in full transparency, I did participate in the meme stock craze. What was that in 2021, a few years ago? And I made some pretty darn good money during that time. But I don't think this is the type of environment for prudent speculators to be engaging in such trading. And as you can see here, GameStop, after opening up more than 100% higher, has dropped over 50% on the day, and actually even more if you consider the lower wick of that candle. So I don't think these are really good stocks to be trading overall. It's just purely gambling, and gambling and speculating are two totally different things. So take a look at AMC here, up about 42% on the day. And again, I think this is just a massive distraction from what's really going on in the markets right now. You had inflation PPE data come in above estimates today, and tomorrow you have the consumer price index, the CPI data coming in, and we know that PPI tends to be a leading indicator for CPI. That is when producers have the ability to pass off higher costs onto consumers, they will generally do so. And so if you take a look at how bonds responded, you are seeing duration lead to the upside. You saw an initial sell-off on the news, but the fact that we rebounded higher is not exactly a bad thing. Now, we could reverse again tomorrow, depending on how CPI comes in, but the fact that bonds have held up so nicely despite this hot inflation report is generally a good sign for the asset class. Now, that being said, we continue to see lower lows and lower highs. But for now, I think stock traders, equity traders, stock investors need to be thankful that bonds are bidding, because we've seen varying periods of correlation, positive correlations between stocks and bonds. That is, from the October lows to the end of last year, we saw a positive correlation between stocks and bonds. So it seems to be the case that coming out of important market lows, there tends to be positive correlations between stocks and bonds. But then once the rally matures in stocks, that correlation starts to break apart. And so we can't rule out that type of scenario playing out again. For now, I think that bonds bidding is a tailwind for stocks. And you're seeing that with the NASDAQ outperforming to the upside. You're also seeing chips see a nice bid today. And we know that chips tend to act as a leading indicator. I call it a leading indicator within a leading indicator compared to technology. So this is a pretty good sign overall. But again, tomorrow's inflation report will be important, because if bonds reverse back lower at this stage of the equity rally, it does give me some cause for concern in terms of the possibility of stocks reversing back lower. But for now, a couple hours left in the trading session here today on Tuesday the 14th. It's looking pretty constructive. Now, as everyone's paying attention and being distracted by the meme stock craze, I'm finding really nice setups in names like Veeco Instruments, a tech stock. This one broke out to new highs just a couple of days ago. It's been consolidating above former resistance turn support. I still like that setup quite a bit. And I think there's a lot of really good setups happening in the tech space. We have been all over this Itron trade, now flagging within a bull flag. Big gap up recently. This is going sideways. I have an upside target on this stock in the 160 area, so significantly higher. We picked up shares of this a couple of weeks ago, and it's digesting the gains, which is exactly what you want to see. But one of the biggest winners that we've had over the last week or so has been Oscar Health. Now, we broke out from this saucer formation about 2 weeks ago, and we've seen nothing but upside follow through. Note how the RSI indicator is deeply into overbought territory on this stock, showing that bulls are overwhelmingly in control of momentum. And so I think this stock, as measured by these price patterns, could rally as high as 34. We've been tightening up our stop losses along the way, and I'm still very pleased with the performance of this stock. Now, I do want to jump over to one of the uranium positions that we've been watching. This is a back up the truck rating for myself and for members Cameco Corporation consolidating near the highs. It did rally to a new multi-year high just a couple days ago. It started off the week on a bit of a defensive note, but seeing a nice recovery here on Tuesday, trying to complete another higher low. But I think the big story is that you are still seeing setups underneath the surface of the market. And even if you look at some of the big names, we've been talking about Apple being bullish Apple. I did get stopped out of that trade because my stop loss was a bit tight, but I was right on the likelihood that this stock has bottomed and Apple continues to see a very nice bid. Tesla's price action today is very encouraging. I'm not entirely convinced that the bear trend has ended and a new bull trend has begun, but this is definitely a step in the right direction. If prices can take out this high from the end of February here in Tesla, that creates a significant case of a higher high. And what we have here after Friday's low and the rally that's started off this week is a potential case of a higher low. So if you have a higher high and a higher low, that creates a bull trend. And if Tesla starts to rally, folks, this is going to be another new potential leader in this market. But if you look at the existing leaders, look at NVIDIA, perhaps consolidating into this broadening wedge, which could, in theory, lead to a rally as high as 1,200. I know that might sound crazy now, but what would the indices do if NVIDIA rallies to 1,200 or another 30%? I presume that would be bullish for the indices as well, right? Take a look at Amazon. That made a new high recently. That's still consolidating near the highs. This is all bullish price action. So definitely not something to sleep on right now. I think what we're seeing across stocks is some shifts in leadership, which is normal and healthy. Sector rotation is the lifeblood of bull markets. Take a look at the financial sector. Has been very strong. We've had long positions on names like Wells Fargo and Goldman Sachs for a couple of months now, and these are really strong technical stocks. I have an upside target at Wells Fargo in the $83 area. When it comes to Goldman Sachs, I think this stock could rally another $100. But when you look at financials, the big leaders, JP Morgan, Goldman Sachs, and Wells Fargo. Now, there's another stock that technically has some overlap between financials and crypto, or really just trading in general, and that's Robinhood. I've been long Robinhood for a couple of weeks now. They've had some SEC probes, some mixed earnings results. They had some good account signups, so user growth or whatever. But Robinhood looks pretty good to me. I like how it's been consolidating near the highs here. As I and many other speculators like to say, when in doubt, zoom out. You have a huge base that this stock is trying to break out from, and I think it could eventually hit 30. Now, Robinhood has some overlap into the crypto space, so I do want to take a look at that. Bitcoin and Ethereum selling off today. But if you look at some of the big names associated with the crypto sector, MicroStrategy, trying to perhaps break out of this rounding bottom or saucer formation. To me, we're not out of the woods yet. It's not time to get long at this moment, but we are approaching that point in time. And I would just preach patience on these stocks like MicroStrategy and Coinbase, because we know when they run, they can really run, but when they drop, they can really drop. Volatility works both ways. Remember that. And you can't, just celebrate about 100% moves to the upside and then complain about 50% moves to the downside. If you're going to, celebrate on the way up, you have to be ready for downside action on the way down. The last thing that I want to comment on today is what's going on in precious metals. I really like the price action in gold and silver. This is setting us up for one final, perhaps even euphoric rally, especially in silver. I'd like to see gold make a new all-time high, but silver especially, if we can clear 30 on silver, I think we could rally into the $30 to $36 area. That has been my upside target in silver coming into this year. So even 6 months ago, I was looking at silver rallying into the 30 to 34 to 35, even $36 area. But some of the names that we've been tracking in this space continue to do well. Anglo Ashanti consolidating near the highs. That's a back up the truck rating. Agnico Eagle Mines, this one continues to hold up well. We did pick up a position recently in Wheaton Precious Metals. That broke to a new high. And if you zoom out on this chart, I really like it, because what I'm doing in this precious metal sector is I, play this bull market in this sector and asset class, is I'm looking for the stocks that are closest to their either all-time highs or new multi-year highs. When you look at Wheaton Precious Metals here, you're only really a few cents away, less than $1 away, not well, from the recent high, but really, let's say $4 or $5 away from an all-time high on this stock. That's a really good sign of relative strength and something that should not be ignored with respect to finding the next potential leader in this sector. So also have Eldorado Gold. That one's down a little bit today. And then, of course, there's Alamos Gold. This one is looking nice. So I think that if you're going to be in the precious metal space, recognize that the easy money has been made, but there are still some tradable opportunities in the space. But don't get distracted by all the meme media. Last time we saw meme stocks bid like this, it was a sign that we're really close to the end of the rally. So just be careful out there. If I were you, I would avoid those meme stocks. But if you're going to play with them, keep your capital small and don't speculate with what you need, right? Only speculate with what you can afford to lose, especially in those high volatile names. Remember, we have leveraged markets for a reason. So if you're looking for that type of volatility and intraday price swings, look at futures, look at options. You don't need to play in those meme stocks that have some questionable trading going on right now. So that being said, that's all that I wanted to share with you today. Thank you so much for watching, everyone, and I hope to see you in the Theo Trade chat room.